Welcome back to the show. I'm Dan Edwards, and you are listening or watching the Seattle Eastside Real Estate Podcast. We're here. Joining us here in a moment will be Dan Gelhaye. He has lived and worked in the Puget Sound community for over 20 years. I have known Dan for over 10. He resides in Eastern King County with his spouse and 2 children. Dan is in his 12th year, so I've known you over 12 years. Working as an independent insurance agent. He brings 25 years of experience in finance and risk management knowledge and expertise to his clients. Dan is straightforward and he's super friendly, pretty laid back. He likes taking photos. He does a really great job with photography. So please join me in welcoming Dan to the podcast. Hey, Dan.
Hey, Dan. How are you?
It would make sense to have one of your pieces of art behind you there.
We just moved into a new space not too long ago, and so I'm working on that actually.
Gotcha. It looks very insurance-esque.
Yeah, it does.
All right, cool. Well, I have to say this is a great time of year to sit down and evaluate home insurance and everything as a whole. And this is an endorsement for Dan because I've been working with Dan for a long time. There are insurance agents who just do the thing. They get the insurance, they do it. They're order takers. And then there are those that are consultative in your approach. And Dan rises to the top, and he's always looking out for your best interests. I get regular calls from him about our policy, and that's not a normal thing. And I always got to say that I appreciate you. And so do everybody that I've ever sent you to, always appreciate you. So, all right. So tell me about Eastside Insurance Services, Dan.
Yeah, well, first off, I appreciate the kind words, Dan. So Eastside Insurance, we are a longstanding independent personal lines agency. And basically what independent means, it means that we work for our clients, not any one insurance company. So we have a pretty rich menu of companies that we partner with. So it gives us a lot of flexibility to go out, shop the market, put nice tailor-made packages together for our clients. And we service all of Washington State. And when I say personalized insurance, what I mean by that is we do auto, home, rental properties, renter's insurance, earthquake, flood, and then all the toys. So boats, motorcycles, RVs, classic cars. We really specialize and hone in on those personal lines.
Awesome. And then the personal lines. Now, as we kind of get into today's topic, the end of the year checkup. So what are the major homeowners insurance covers? What are the major issues?
Yeah, there's really 4 major parts to homeowners insurance that I'll talk about. There's a lot of endorsements that can be added on, but kind of the major coverages that most people grasp onto are the dwelling coverages, right? So first and foremost, the physical structure on the property, your house, and then any other structures that may be on the property, like a gazebo or a detached garage or something. You've got personal property coverage for anything that you take with you when you move. So, your clothing, your electronics, your furniture, things of that nature. A little known component of homeowners insurance is something called additional living expense. So think of this, Dan. Let's say you have a major fire at your house and you have to go live in a hotel for 6 months while the home is being renovated. You still have to pay your mortgage, right?
Mm-hmm.
But now you have this additional living expense because you've been displaced. So homeowners insurance will help cover that inflated living expense for the period of time that you're displaced. And then personal liability. So anything that's not auto accident related that you may be held liable for, homeowners insurance can be a stopgap for that too.
All right. Are there things that homeowners insurance will not cover?
There are. So what I want the listeners to think about are maintenance repairs. So anything that is just normal wear and tear that you have to take care of as a homeowner typically is not covered by insurance. So think of things like, just the roof is worn out, the paint,
gutters falling off,
leaky windows after a long period of time, stuff like that. And then your standard homeowner policy also does not cover damage from flood or earthquake. And a lot of people don't realize that there is specialty companies that will add that coverage on if it's important to a homeowner, but it's typically not covered on a standard policy.
Now, is that just in Washington State, the earthquake? Because I'm guessing California is probably automatically on there, right?
Actually, it's not.
What?
It works the same way. Yep, nationwide. Yep.
Nationwide, separate group of money that you got to pay. Okay, I gotcha.
Separate.
What are the most
Separate.
common types of homeowners insurance claims?
I would probably categorize it into two different types of claims. So there's property claims and liability claims. So for property claims, and this is kind of nationwide averages, but the most common type of property homeowner claim is wind and hail damage. It comprises of about 45% of all property claims on homeowner policy. The average payout is somewhere around $11,000 to $12,000. Fire and lightning damage would be the second most common type of property claim. The average payout is way higher. It's about $78,000.
Now you lump fire and lightning together?
Yeah, because oftentimes lightning will
Leads to fire.
lead to fire. So, and then non-weather water damage. So things like freezing pipes or a burst pipe. That's just under 20% of all property claims with an average payout of about $11,000. And then liability claims. And what leads liability claims for homeowners insurance actually is dog bites. It's about a third of all liability claims, with the average payout being just under $30,000.
So dog bites fall under homeowners, huh?
Falls under homeowners, yep. And then home accidents. So if someone slips and falls, or something falls over and
Trips
hurts
on a
someone.
hose, crack in the walkway.
Yep.
Mhm.
Exactly.
So all those fun fail armies that you see in the Ring doorbells, those individuals could probably call that homeowner and say, "Hey," right?
That's right.
My one claim in that regard, and this is a true story, it'll be funny for those of you listening, is I was showing a house. It was kind of a foggy day like we have in the Northwest, right? Kind of foggy, icy day. And it was what we call a reverse floor plan. Well, what is it? It was the upstairs was the entry, right? So you had to go up a flight of about 25 steps to get to the top stairs. So I showed the house, and we were leaving to walk down the stairs. And it was kind of it's wood stairs, so that, they're slippery, right? And I was with a gal who had a cane, and I said to her, I said, "Be careful." And I took a first step, and I went down 25 on my back. It hurt really bad.
Ouch.
Luckily, I didn't break anything, but I did call I called the agent, and they gave me the name of the insurance company, and I filed a claim, and I was able to get chiropractic care with our friend Bob. So that was really super important. But that's my one experience personally with that. It went fairly fine. So
Okay. Yeah, that's a great
let me
example.
ask you this other question is my daughter is at university, right? And she asked me the other day, she said, "Hey, Dad, if we have fire or water damage, is my stuff covered out here?" And she's renting. Mm-hmm. So what do I tell her, Dan?
Tell her that that's a great question, and I'm proud of her for asking that question. And the short answer is yes. So when you have homeowners insurance, you have worldwide coverage typically on your personal property. However, in your daughter's case, it might be a good idea for her to take out a renter's policy for a couple of different reasons. One, it's usually less than a couple $100 a year. You keep the claim off of your homeowner policy. It's a smaller deductible, because typically with your homeowner policy, you'll carry a little bit of a higher deductible, like $1,000, $1,500, $2,000. And so with the renter's policy, you keep your homeowner policy clean of those types of smaller claims, smaller deductible, and she can make sure that her stuff is covered where she's at.
I'll be paying for that. She's not going to be taking it out. She's still under my care at this point. But families that have kids at college, do they have to get one for each?
They should.
They should. Okay.
They should, if they're not living together in a dorm, yes.
Okay. All right. Mm-hmm. Okay. So let's move on to another question here is how does inflation affect homeowners insurance right now?
That's a great question. Inflation's kind of a buzzword. It's been a buzzword for several months out there in the marketplace. And inflation absolutely affects homeowners insurance in a couple of different ways. One of those ways is in reconstruction cost. So homes are just way more expensive to rebuild today than they were a year ago, 2, 3 years ago. As you know, the cost of building material and labor has skyrocketed. They've come down slightly from their peak, but it's still much more expensive to rebuild a home. And also the cost to repair increases for the carriers. So they're paying out more in average in claims than what they had in the past. So there's a couple of things that it affects. So number one, what we find is that homes are typically underinsured more than what the historical norm is. And that's critical and important for people to understand because, let's say your home is insured for 500,000, but because inflation has risen so much, it may take 600 or 650,000 to actually rebuild your home in today's dollars. There's a gap there, and that can cause issues. The other thing that we're seeing is the premiums that are being charged for homeowners rates to go up a little bit more than what they normally do as well. So on the average year, you'll typically see your homeowner premium increase about 3 to 5%. We're seeing on average 8 to 15% or even higher now because they're having to raise the coverages on people's homes more than what the norm has been over a long period of time.
Okay. All right. And so the biggest coverage issues you're seeing on a family's homeowner's policy, what are you finding?
Yeah, probably the number one thing is that the home is underinsured. And I mentioned this, roughly 2/3 of all homes across the United States are underinsured, anywhere between 20 to 60%. So it's pretty major. So this means, the risk of major financial loss is there if they have a catastrophic type of a loss. Also sewer issues. So, it may feel that on the surface, if you were to experience an issue with your sewer line backing up or a sump pump failure, that you'd be covered by your homeowner policy, but this requires a separate coverage. It's pretty cost effective to add, but typically it's not covered unless it's added. The other thing I would say is inadequate liability limits. So generally speaking, on a homeowner policy, the maximum amount of liability insurance that one can get is 500,000. But as you know, Dan, especially here in East King County, the values of homes are much higher than that. So what do people do? That's where excess liability or umbrella insurance comes in to give the homeowners added protection to protect their home equity, protect their future earnings, protect any other assets that they may have. So those are a couple of the major issues I see when I'm reviewing someone's homeowner policy. Another one that people don't think about is if they have scheduled jewelry on their homeowner's insurance. Maybe they scheduled it out 8, 9, 10 years ago and their appraisal's 8 or 9 or 10 years old. Well, that piece of jewelry, because the cost of gold and silver and all of that increases over time, you may be underinsured on your property that you have scheduled out.
So what that means when you say underinsured, it means the insurance company will come up and say, you lost this stuff. You're like, yep. And they're like, okay, here, the value is this. And you're like, no, it was 8 ounces. It was 4 ounces, whatever it was. And they come back. They're only going to pay you out what their max insure payout was.
So I'll give you an example. So let's say that you have your wife's wedding ring scheduled out on your homeowner policy, for example. And let's say you did that 10 years ago and the value at that time was $7,500. Well, the ring today, if you appraised it, maybe it's worth $12,000, right? But you still have it insured for $7,500. Let's say that she loses the ring and you file an insurance claim. Against that, the maximum amount that they're going to pay out, unfortunately, is what it's insured for at $7,500, even though you can't replace it for that because the cost of the precious metals have gone up.
Gotcha. Okay.
That makes sense?
Yeah, that's a lot clearer because you actually designate a value.
Exactly.
Okay. All right. So finally, what do you recommend our listeners do if they're concerned about their home insurance coverage, cost, or both? and want that end of year checkup?
Yeah, like you had alluded to, now's a great time of year. We're getting ready to turn the calendar over to 2023 to have a checkup done on your homeowner's insurance. So what I will say is that homeowners, generally speaking, can expect an increase of probably 8 to 15% over their last policy term. This is in line with expectations and what we've been seeing. However, that being said, there's still a lot of variation out there, company to company, on what they charge for homeowners insurance. So I would say reach out to their agent, ask for a review of their home policy, ask to have a reevaluation done to make sure they have adequate coverage on their home. And don't be afraid to ask questions. That's what the agent is there for. So if there's something you don't understand on your policy, don't be afraid to ask. And I'm also more than happy to be a resource and offer a complimentary review for any of your listeners.
Awesome. Well, thank you very much, Dan. I so appreciate you. I appreciate you coming on. If you want to reach Dan, you can call him at 425-336-6000. What's your email address?
It is Dan at eastsideinsure.com.
Insure.
INSURE.com.
Insure.com. Eastsideinsure.com. You can just send him your home insurance policy and he will review it for you. It's worth it. Doesn't cost you anything, and it definitely can save you some money and also protect you a little better. Thank you so much for coming on, Dan. Appreciate it.
Thanks for having me.